2 o'clock. It's time for Tax Talk Tuesdays. And I'm trying to see if you guys can hear me. If you can hear me, let me know. I'm going to go ahead and get started. Wait a couple of more minutes. I don't know why this does not show up on my feed anymore for Facebook. Someone has to DM me and let me know why this is not showing up on my Facebook feed. I can't get it, but let me know if you can hear me. If you can let me know that you can hear me, that will be great. It's 2 o'clock, which means it's time for Tax Talk Tuesday. We do this. I try to do it every Tuesday, even though it doesn't happen. But I do try to do it. I try to come to you. I try to give you some area of the tax law that I think is going to be helpful for you. So I'm going to try to refresh my feed again to see whether or not I am showing up, so I will know if you can hear me. Okay, yep, it looks like you can hear me. Yay! I'm so excited. Okay, I don't know how to, still trying to work this. Okay, so today I'm going to be talking about, first of all, let me just kind of share with you who I am. My name is Beverly Winstead. I am a tax controversy attorney. I practice in the Washington, D.C. area, but I actually have clients, I would say, probably all over the United States and even some internationally. And I help people that have problems with the IRS. So before I get started, I do want to just remind everybody about upcoming filing deadlines. There are two really important deadlines that are coming up. One is the September filing deadline for people that have flow-through entities. That means if you are a LLC, a multi-member LLC, if you have that kind of business, or an S Corp, your tax returns, if you filed an extension earlier this year, is due September 15th. They are due September 15th. If you filed an extension and you're an individual, or yeah, it should be the C Corp also. If you're an individual, remember those returns are due October 15th. You do not want to be late with those filings, because if you're late, IRS and you owe, you end up paying additional penalties and interest. So what I always recommend is, even if you can't pay the balance because you owe, you still want to file. That will prevent you from being assessed penalties, late filing penalties anyway. So try to make sure you get that in timely. Today I thought I would just kind of go over, I would say probably maybe about 2 weeks ago. This may be old news now, but I posted on my Facebook page about a case that I resolved, and it got a lot of, I would say, likes. A lot of people commented, and essentially what I said was that I was writing a closing letter to my client, just sharing with him that I was able to resolve his tax case. He owed, when he came to me, about $411,000, and we were able to actually get the entire debt wiped out as a result of basically just showing the IRS that he didn't owe these taxes. So in this particular case, he was being assessed this amount of money because IRS said that he was a part of a business, and that particular business did not pay over employment taxes, right? So do me a favor, if you're watching right now and you know someone who owns a business, if you can hear the share, if you can hit the share button, this is really going to be important for them to hear, because I'm going to talk about their responsibilities as an employer, right? And when they have employees, some of the obligations and responsibilities that they need to be aware of, and then also some of the pitfalls. So if you own a business and you have employees working for you, you are responsible for paying their employment taxes over to the IRS. Now I know it's a lot of different things happening. That's the general rule. But because of the CARES Act, everything going on with the pandemic, IRS right now, with IRS, you can actually defer some of the payroll taxes. I won't go into that because that's actually still developing, and employers are trying to figure out whether or not it makes sense for them to defer some of the taxes. So, but I'm talking about the general rule. Historically, this is the rule. When you are an employer, one of the things you have to do is, if you have employees, you must send IRS those taxes. You know, when you look at your W-2, your pay stub every week, if you're an employee, you see that taxes are coming out, right? So your employer actually has to submit those taxes over to the IRS. Now, if they don't submit those taxes, then that's when IRS will come back to the employer and say, hey, you know what? You did something bad, right? You did not pay your employees' taxes, and therefore we're really upset about this. So not only does the company owe taxes, but you as the employer, the responsible person, you also are going to pay a penalty because you didn't do it, right? So that's one of the things. If you are a business owner, you want to make sure. Okay, so you want to make sure that you do that. So there's two things IRS looks at. They look at whether or not you are a responsible person and whether or not you were willful and not turning those taxes over to the IRS. What makes you a responsible person? If you have any type of ownership in the company, if you were involved with the finances of the company. So even if you are not an owner of the company, if you are responsible for the finances, let's say you're the CFO, or you are a bookkeeper or an accountant, if you have some type of responsibility for paying bills, for watching the taxes, those kinds of things, right? The IRS might say you are a responsible person. The things that they look at in determining who's a responsible person, they look to see who's on the bank accounts. They look to see who's on the signature cards. They look to see who signed tax returns. They look to see who's signing payroll checks. So that's why it's not enough to just, if someone says, hey, let's go into business together, you want to make sure that if you are responsible, or this person says that you're going to be responsible for being on the bank account, those kinds of things, you have to be proactive and you have to know what's really truly happening with the finances, right? Because the more responsibility you have, you know, IRS may look at you and say, hey, you are a responsible person. That's the first thing they look at. The second thing they look at is whether or not you were willful in not turning over the taxes. So the interesting thing is, when we look at willful, we look at, did this person intentionally not take over turn over the taxes, right? IRS, they look at that, but the other thing they also look at is whether or not you were negligent, right? So willful also can mean you were negligent. You should have known that the taxes weren't being paid, right? If you have access to the bank accounts, if you have access to the QuickBook records, if you have access to the finances in general, right? IRS is going to say, look, you can't turn a blind eye to this. You should have known that this was not happening, right? And so those are the things when you're going into business that you want to be mindful of. You want to make sure you're with people that if they deem you with the responsibility to be in charge of the finances, that you actually monitor and pay attention to what's going on in the finances. Don't just sign checks randomly because payroll has to be made or something like that, because it's going to be a lot harder to get you out of a certain situation if you have signed some checks or if you've signed some tax returns. You know, I know my mom always says, make sure you know what you're signing, because whatever you're signing, it certainly can have consequences, right? So going back to, and for those of you who just joined, I was just sharing the story about what I posted 2 weeks ago about helping a client who owed IRS, a little over $400,000. And we were able to show IRS that he actually didn't owe the money. And I was explaining a little bit about why IRS assessed him the taxes, and it's because they said that he was both responsible and willful in not paying over employment taxes. So, we actually put a good case, a good defense up, and IRS eventually conceded the case, right? They said, you know what, Ms. Winstead, you are correct. He had been dealing with this issue for a long time. I would say probably at least 5 or 6 years before he, came to us, and definitely happy that we were able to get it resolved. It was the right result. He certainly was not, should not have been assessed these taxes. I do, to a certain extent, understand why IRS did it, because he did have some involvement. So you want to be mindful of that, right? The other thing when it comes to trust fund taxes, because this is what it's called, right? Anytime you have employment taxes, IRS is saying, hey, you as the employer, you are taking these taxes out of your employee's paycheck and you're holding them in trust for us. So you need to send these taxes to us. And if you don't, then you violated the trust that we have between you as an employer and a taxing agency. So that's why IRS is super harsh. Again, they not only assess the business, they also assess you individually these taxes. And you can imagine with an amount that large, the kind of financial challenges that it was causing, or caused anybody. You got liens on your credit. At the time when IRS was placing liens on the credit, it also could perhaps prevent you from getting a house, moving forward, getting credit, and the thing about trust fund taxes is that you can't discharge them in bankruptcy. So some taxes you can. So he really only had a couple of options. Either we prove to IRS that he wasn't a responsible party, and the tax assessments were incorrect, or we could get into some type of collection alternative, which would be an offer in compromise, which is a settlement with the IRS, or payment plan, or show that he was currently non-collectible status. After looking at his financial situation, we definitely thought attacking the assessment was the best approach to getting his taxes resolved. So if you know someone who has trust fund issues, has employment taxes, we work on a lot of those kinds of cases. Feel free to share our information with them. I'm going to go ahead and give you my information now in case you don't have it. Law Office of Beverly Winstead. The number is 301-306-1234. You can also visit us at www.irshelpattorneys.com. And then the last thing I'm going to say, and then I'm going to jump off, is that if you do have tax problems, try to give us a call. Definitely give us a call. The number I just gave to you, 301-306-1234. The law school, many of you know I also work at the law school, and we work with low-income taxpayers over at the law school. So if you need assistance, or you know someone who needs assistance, particularly during this pandemic, I know a lot of people are unemployed, and now's a good time. There is a lot of things rumored about a new economic stimulus check, and that may require that your 2019 tax returns or your tax returns be prepared. We certainly can help you with that. If you need assistance and you can't afford to hire an attorney and you meet the criteria as a low-income taxpayer, we're certainly more than happy to help you out with the law school. The number over there is 410-706-3295. Again, 410-706-3295. That's what I want to share with you. And, if you're struggling with tax problems, I want you to know, don't spend another day battling. Give someone a call. Even if it's not me, you know, reach out to someone and see if, you know, you can use this time to really get your life back on, get your financial life back on track. So with that being said, thank you guys for tuning in. Really appreciate it. Hope I gave you some information that may be helpful. Have a great rest of your day.